and the budget session of Parliament has begun. You had the President addressing a joint sitting of the Lok Sabha and Rajya Sabha. Following that, the Finance Minister Nirmala Sitharaman tabled India's economic survey. It is a report card of the economy and how it fared in the last year. And the survey has pegged India's growth at 6.6% for 2022-23. Let's go across to Priyanshi for more. And Priyanshi, give us more highlights from the economic survey that also said the global economic shocks are severe but spaced out.
Well, Gargi, the rate of 6.6%, that's the rate that the economic survey has said for the GDP growth for the financial year 2023. Now, this is lower than the rate that was pegged by the Reserve Bank of India. The Reserve Bank of India said that the rate will be around 6.8%, while the economic survey projects it to be around 6.6%. Let's also do a comparison with the other figures that had come out. Economic survey, of course, pegs it at 6.6%. RBI had said 6.8%. World Bank had said 6.9%. IMF had said 6.1%, OECD at 6.6%, and the Asia Development Bank put it at 7%. So the economic survey's figure is lower than the other figures, some figures such as the RBI and the World Bank as well, but it is higher than certain other figures such as the IMF that pegged it at 6.1%. Now, the economic survey largely talks about the inflation concerns and also the Ukraine war. The economic survey says that Indian economy has recovered from the pandemic in financial year 2022-23, and the third wave did not really create an impact on the economy as the previous waves had. But the economic survey also points out that commodity prices that were the major fallout after the war in Ukraine have still not gotten back to the pre-conflict levels. They're saying that commodity prices are still higher than what they used to be before the war. Now, these commodities are, of course, energy prices that we get, and also prices for food. The economic survey says that inflation was rising primarily because of the rising food prices and because of rising energy prices as well. Now, they also make a comment on the performance of the Indian rupee, and the economic survey says that Indian rupee did perform better in comparison with other emerging market currencies and other peers. If we talk about that comparison, the economic survey says that Indian rupee performed better than the South African currency, the Brazilian currency, the Australian currency. They say that the depreciation for all of these currencies, South Africa was 16.4%, Brazil was 11%, Australia 10%, Indonesia 8.8%, and India was 8.8% as well. And there are some countries that have had depreciation lesser than the Indian currency, which is China at 8.8%, UK at 8.6%, Japan at 7.7%, and Euro at 4.1%. So the economic survey also highlighting all of these pain points that really were highlighted for the Indian economy after the war, which are the commodity prices and the falling of the Indian rupee. And the economic survey is standing by the government's stand of the Indian currency performing better than other currencies and other peers and emerging market economies. Now, if we talk about the other highlights of the economic survey, it talks about commodity prices, as I said, and it says that there was a sharp rise in commodity prices due to the Russia-Ukraine conflict, and inflation still stays high, driven by food and energy prices. Remember, inflation only went back to the RBI's target band of less than 6% only in the month of December. So it's been 2 months since inflation has been within that 6% bracket. So that's what the economic survey also points out, that inflation has come back to RBI's target band, but it's still a concern for the economy at large. It says that economic growth in India remains resilient, and the private consumption is the highest since financial year 2015 across H1. That's also an important point that's coming out from the economic survey. And they say that the Indian economy appears to have moved on after the encounter with the pandemic, and Indian economy staged a full recovery ahead of many nations. So repeatedly, the economic survey is also making several comparisons of the Indian economy with several other economies in terms of the Indian currency and also the Indian economic recovery. They're saying that the Indian economy staged a recovery after the pandemic that was well ahead of other nations, other peer nations. So that's also an important comparison that's coming from the economic survey. Let's also go through some of the other highlights of the economic survey now. And It talks about how India has staged a broad-based recovery across sectors, positioning to ascend to pre-pandemic growth path in financial year 2023. Remember, we're still not growing as much as we did before the pandemic in 2019. And in fact, our per capita GDP is still below the pre-pandemic level. So the economic survey is saying that India now is on the path of that full recovery, and it will most probably stage that full recovery in financial year 2023. Last year as well, in financial year 2022, the Indian GDP had crossed the pre-pandemic levels, but just marginally, and the performance wasn't as, the GDP growth rate wasn't as high, neglecting, if we keep the base effect aside, it wasn't, it couldn't be called a full recovery just till last year. But now the economic survey is saying by financial year 2023, which of course will end by March, it could be said that the Indian economy will stage a full recovery. It also says that retail inflation is back within the RBI's target range in November 2022. As I was mentioning, that in November and December, both months, the inflation rate has been within the RBI's target band of 6%. So that's what the economic survey is also mentioning as a positive sign. Before that, from January to October, the inflation rate had been above 6%, which is above the RBI's target band, and that was definitely a concern for the Indian economy. It also says that enhanced employment generation is seen in the declining urban employment rate and in the faster net registration in the employee provident fund. So they are saying that there is an enhanced employment generation that is seen, and that is seen in the declining urban employment rate and in the increasing registration for the employee provident fund. They also say that creating public goods to enhance opportunities, efficiencies and ease of living, trust-based governance, enhancing agricultural productivity and promising the private sector as a co-partner in development is the focus of the government reforms. Now, these points are very important because remember, the economic survey really sets a preview for the budget as well. So these points that are being highlighted in the economic survey are likely to be highlighted in the budget as well, as the economic survey really sets that preview and the base for the budget that will be tabled in the parliament tomorrow. Now, they also say that the growth in credit offtake, increased private capex will usher the virtuous investment cycle. So many highlights that are coming in from the economic survey. We'll continue to track these highlights and bring you the latest numbers.